Audio morning brief for the stock market and a few outside markets. It's November 26th, 8:18 a.m. Eastern Time. I'm Rich Possum for Critical Point. Okay, overnight, of course, as you know, they slam dunked the stock market. They got nervous over the news announcement of concerns of the new COVID variant out of South Africa, and that it can come up with many different variants, that it's highly mutative. And if that's a word. And at any rate, last night the model called level 4 tops, and no surprise that it was coming down overnight, but coming into the office this morning, I was surprised to see it down this much. I did notice last night on Bloomberg, it just seemed the markets were soft around the world and sounded like the news wasn't all that keen on China. And then, of course, the discussion of COVID and some of these things. And I think we still have all this unwinding of some of this gamma-related derivatives trading that links to the stock market as either hedges or various speculations or delta neutral type trading that just got out of hand. And that should be wrapped up by the end of the month, although we can't rule out maybe that they're putting new positions on and have to continue to make some adjustments at the start of the next month. At any rate, the model's saying, yes, the market could bottom as soon as 1 p.m. today, but the market closes early today. I think most traders are going to be a little nervous. What if they hammer this again Sunday night? And the model is saying, yes, it can bottom Sunday night, the overnight trade, but it does not have to bottom to near the close of Monday. So unfortunately, a wide span of time there for the next level 4 bottom. And I think as I zoom out and look at what's going on here, I fully understand why many investors would say, I guess I better wait before I buy any more going into early next week. That next week's probably the better time. And as I told you a few days ago, the seasonal that some people are watching, some of them watching back to about 1985, suggests that the stock market on average was lower from near the end of November into the first week of December, and then it turned up for the chance for a Santa Claus rally. As we zoom out for these level 4 swings, which, by the way, are intra-week swings, or every few days pops and drops, and this is a heck of a drop right now, it's going to create a huge gap lower in the cash market, which means the cash market's going to rally someday, which means even futures will rally, that they're going to pick their head back up. They got a huge gap to fill. But that doesn't mean it won't go lower first. It doesn't mean they're going to step in there and buy it immediately this morning. On the other hand, if you look at the trading from last week into this week, with this unwinding of this delta stuff or gamma stuff, you can just see that, if they slam it down, they are willing to slam it up. And until today, they have been really against knocking the market down much. But today, as we zoom out for the bigger trends, we can see level 3 trend is still down, did not bottom the day before Thanksgiving, which was the earliest allowed, and it can now bottom near the close today to any time next week. And I think it's probably safer with this kind of volatility to miss out of a buy the dip opportunity and assume the bottom occurs next week. I just got to warn you, this market is so nutsy that there still could be people out there saying, oh, that's just too fast of a drop, buy it anyways, and they could control it enough to rebound it so that the true level 3 bottom comes in next week a little higher price than, say, this week's low. So on balance, I just feel like it's probably safer to be waiting to next week to buy. I've been scaling in all the way down and I've been in too fast. But fortunately, that's for my cash positions that are more intermediate trend and long-term to very long-term, more retirement-oriented. And I'm fine with writing this out. I don't see any kind of a crashing moment for a long period of time and those kind of things. The model's saying level 2 top, finally got it, it's in place. Got to start looking for a level 2 bottom that can show up today, but it's looking like it would be better if it showed up in early December. And if I look at patterns of monthly charts, it's almost nice to see it coming down into the close of the month, and like to see it a little lower to start the month and then up by late month. So no change when we zoom out from the level 4 to the level 3 to the level 2. There's no change to the forecast. There's probably going to be a bottom first half December, maybe as soon as today, looking like it's safer to wait to next week and see what we get. And it should rally for a Santa Claus rally later this month on into January. Zooming out additional amount, the level 1 trend is up from October low into January, into February. So these are just zigzags, and at the moment it's really zagging, really coming down. It's really scary, and people are scared now of this new COVID variant coming into play. They're going to be concerned of the upcoming battle over the debt ceiling, which hopefully this COVID will inspire these politicians to calm down. But we know there's certain types of politicians, they just love a battle, and they love to be a nuisance, okay? And then, of course, we have an inflation report coming out on December 10th. We did get a PCE report day before Thanksgiving on inflation, and yes, it was high like everybody. To me, it really wasn't all that bearish, frankly, okay? But it did show, yes, inflation's heavy, it's hanging in there, all right? And but some of the other economic news look really good. It suggested, yes, people are paying more for something, but they're not letting off. They're stepping on the gas, buying even more, okay? Which can also force inflation to stay up a while longer. So it's a mixed picture. On one hand, the high inflation is saying it's really not hurting the market or the economy. And if anything, it's a long-term positive bullish thing. On the other hand, we are, in fact, paying more, okay? I suspect that really the average American is not paying anywhere near 6.4% interest rate because we all don't buy the same things at the very same time. It's broken up and wages have increased, okay? Now, what else can I tell you? Yes, the interest rates are backing off now because of the concern over COVID. They're saying, oops, this can hurt the economy. They're backing off on the instability of at least the U.S. market, if not some of the global financial markets. In a way, they're helping, but in a way, they're also taking protection, saying, we don't know. Maybe things can get a little more serious here and negative. The dollar's also backing off because of the lower interest rates and quite possibly concerns of hurting the economy. And the dollar flips its mind. Sometimes if the economy's not doing well, it would like to move higher, and other times it would like to move lower. So you can't really bet on its direction telling you what's really going on with the economy. It's more of a reaction thing and the relationship to other countries as well. So it gets complicated. Crude oil down $5. Actually, I think it's down 4.5 right now. It got within cents of my target for the January contract around 72.36. Very, very pleased. Made a forecast on this for a couple of weeks ago saying it ought to go lower from November into December. It ought to go down. Mostly I just said oil's worth 76 to 72. A lot of people were against me a couple days ago. I could see people even on the CNBC saying, no, oil is just going to keep going higher. It's low enough at 76, 75. Well, this morning they got a backpedal. Someday it will be 65, 68, but that could wait quite a while. This is probably too fast of a drop for oil. Needs to rebound, but it could, the longer it stays down, of course, it could start to curb the thinking of inflation. I would say today they're now less worried about inflation and more worried that the COVID could cause some problems here. The financial markets could cause some problems, and we actually slow down the economy, therefore slow down inflation. All right, any rate, I don't have downside targets here at this time. They flew past my targets. The model's saying it can pick its head up today, but is due for an intra-week to intraday top and would probably have to come down near the close today. Former upside targets that turned into support levels that can now return to resistance levels, meaning levels where they may want to sell at. And it did actually blip up here a few minutes ago and respected one of those. 46.29 in the December S&P 500 E-mini futures. Next one is 46.40. And the next one is 46.51. Personally, I really like these price levels. I think it's a buy the dip opportunity. I think the market's going higher into January, February. However, and none of this news is going to change my mind on long-term bull market, but long-term bull markets can be down for a very long period of time before moving back up. Even though I'm bullish and saying it's going higher in January, February, I'm with the model. I think the model's on the right track. Problem is this market can go lower still into next week before going higher. It can also just go back to zigzagging up and down, wild and crazy for a few days yet before going higher, okay? Those are the things we're up against. So even though I love this price right here, I'd love to tell you, let's be a contrarian. Let's step right into the fire and buy this rascal. You can see, yes, it can be lower, and I think a lot of people are going to say, you know what, I'm going to wait till at least Sunday night and see what they say. And, of course, for the solid cash people, they're probably just thinking, yeah, well, I either buy today or wait till Monday, and I guess I better wait till Monday. So I doubt there's going to be a lot of demand here. If it snaps up a really fast pace, I think it's nothing but day traders, people who think they can control their risk, okay? And so for the average trader, investor out there who's buying stocks and they can't sell them during the night and stuff like that, I think it's probably better to just let these people play their wild games here and wait till next week to see if we can forge a level 2 bottom. Would love to see the politicians come in here faster and clean up this debt ceiling really, really quick, because I think the December 10th CPI inflation report, even if it's bad, I don't think anybody's going to care. All right, past results are not necessarily indicative of future results. Yes, I know we have the weekly update to do. It may be today, it may be over the weekend. Hopefully, I get enough data here this morning, get enough coffee, and woke up here. We'll put this together and get it out this morning and be done with it. But I can see issues here where we might want to watch the market a little longer and study a few other things, see what else to give you. So try to have a great day here in the markets. And hopefully you had a good Thanksgiving and enjoy the rest of the holiday weekend here if you can. And stay safe, stay healthy. And if I see any reason to alert you during the day, I will. But I think it's probably best that we chill out a little bit and try not to pick the exact bottom and the exact minute for a bottom. That we probably should not be that aggressive, even though I really like how much they've knocked this down. I think it's a buy. But I'm not going to trigger a buy signal here. And I did think it bottomed in on Wednesday there, and I am wrong, and the model's wrong, or really what's going on is we're early, but with this volatility, it sure makes me feel a bit wrong here on an early call. But I had warned you that it can slide into the first week of December. And on a monthly database and monthly chart basis, that really was probably the better call, to be conservative, be patient, that you ought to see a little weakness at the start of the month, and that would actually be a better setup to rally into January, February. Thank you.